Hey, what's going on, everyone? Sal here, MillionaireTradingAcademy.com, where you learn to trade spreads the right way. And I want to show you Apple and why it's such a great trade for the next several days and weeks ahead. Now, let's go ahead and put our moving averages on there. And again, when it comes to trading, I don't remake the wheel. Keep it very, very, very simple. 25 and 10 are my favorite moving averages because we've been trading in several years now, a very bullish market. So I want to keep moving averages that are relatively, bullish short-term moving averages so I can clearly see when short-term momentum has subsided temporarily. So that's exactly what's happened here in Apple, and we noticed it on Friday, and I went ahead and put this in an iron condor. And there are really two ways to make money in an iron condor. One, you keep it nice and wide by benefiting from the loss in the call side option value, and then you also can put it after a high volatility event by going ahead and keeping your put side relatively close to where that bottom was to benefit from that put side volatility that has added a lot of appreciation to the puts, eventually losing value as the stock go ahead and recovers and heads back higher. So on Friday, I went ahead and put an iron condor trade out. And of course, I take all my trades that I put out. And if you go on Twitter, I hope you follow me on Twitter, 60-day trading. That trade was put on Friday, and I always make my trades public. Iron Condor Apple, March 27th, 335 to 265, going out over a month. When it comes to iron condors, I always go out a minimum of 30 days, maximum of 60, and 60 only when I feel like there could be basically no news, coming out of the trade or that particular issue. But in this situation, I wanted to be in it for just a couple weeks. This one at the longest 3 weeks, maybe even 2.5, depending on the price action of Apple over the next several days ahead. But again, we were at 335, and I'll go ahead and map that out to show you why this trade makes so much sense. 335, and then we were at 265 on the downside. So the 335s had a significant amount of credit up there. On Friday, you still, although we did have a bit of a $3 sell off, we still had significant amount of credit on that upside because there was quite a bit of implied volatility up there, as there was expectation that Apple was going to kind of go sideways and then break out higher before, of course, the change in sentiment identified by the 10 and 25 moving average. Now, putting us in this iron condor, we still win even with the gap down because, again, we keep that sell side call, right? We keep it relatively close to the price action, right? I like to come in between 2.5 to as far out as maybe 3.5% from where the current spot price is for that trade. And I like to keep my bottom or my put side very wide. I like to go out as far as I can to where the trade makes sense on an ROI standpoint. We went all the way back to 265, where that should be, just beyond where Apple was coming into the year. So I kind of wanted to be a bit far from that, just in case this could gap down again tomorrow possibly, and I'm prepared for that, right? We're going to make money on that too. So making sure your iron condor is relatively wide, and that's what's going to make you a considerable amount of money, and make sure that those probabilities that you were given are going to end up working out in your favor. Now, what's great about this trade is we're in a market leader. We're in a stock that has, for all intents and purposes, been one of the reasons why the market is trading where it is now. We're below the 50 moving average. If I put up the Bollinger Bands, we can put that up there. We know we're below the bands as well too. So there's a high probability of Apple coming back up, and that's fine as well too. We're going to make money there as well. So, but we know that Apple is a consumer facing product, and we know that earnings aren't going to be as great this year. So we've already had a bit of guidance from Apple, but I think as sentiment really comes through on how destructive that this virus was, that, a month and a half and many stores are closed, people aren't really coming out their house, we're going to end up, I think, trending sideways in Apple. Even if you get a recovery tomorrow, I still think you get that sideways move, maybe a little bit of down, maybe a little bit of up. But the idea of Apple going to 350, 34, I think that's kind of out of the question for now. If you check my Twitter, I had made quite a bit of money just selling 340s for weeks at a time. But now I can almost, I don't want to say be certain, because nothing is certain in trading, but I'm happy to say that at least 340 might be out of the question, at least right now. I get a lot of support in that thought process by simply looking at, let's say, the weekly chart, right? Looking at the weekly chart, it seems like we still got quite a bit of potential downside potential to go, right? We could come down and lose that 25 moving average and get back to the 280s. If this becomes a real serious event, there's no discounting that we can continue to lose here on the monthly chart and head back to that lower, again, 265 area. But I'm happy to be in this trade for the next several days. And I think this was a very successful trade, and I'm really happy about how we put it together. It's your boy Sal. If you want to learn more how to do this step by step, with me taking your time, please visit my website, millionairetradingacademy.com, where again,